Hi everyone, welcome back to Be Rich. It's me, Vinod. Happy Saturday evening. I hope you had a wonderful Saturday morning and you're getting ready for your Saturday evening. And I will make this video short and brief and try and keep it within 10 minutes. Let me put a timer so I know I don't overshoot and take more of your time than is necessary. Well, there's a lot of you who have been asking me repeatedly about the market correction. As I was recording this video on Friday, the market is almost down 420 points, the NSE, that is the Nifty. So I can understand the apprehensions. A lot of people are being trolled about this whole tiffin coffee range investing and being said, now you must be really regretting investing in something like a Natco where the prices are where they are. And, if forget tiffin coffee investing, most of you must be holding your stomach and your mouth and wondering what to do with yourselves. Well, relax, don't panic. This is why I say, don't get carried away with comments on the internet. Don't get pulled away by the trolls. I'm here to reassure you that this tiffin coffee investing or the dollar cost average investing is one of the safest and soundest ways to invest. I know it sounds counterintuitive right now, especially when you see your portfolio down. For example, I've got some data with me right now. If you had invested in Natco Pharma, right, from the beginning of the year, the 1st of January till now, you would have invested approximately around 48,614 rupees if you had been buying one share on every possible day to invest. Your average price would be around 1,157 and you'll probably be down around 31%. Or if you've been looking at a Tata Motors, you would have every day, if you had been doing this hypothetically, you would have invested around 30,000 rupees in the Tata Motors and you would be down around 10%. If you had done Gold Bees, you would have invested a total of 2,889 rupees and you'd be up almost 5%. If you had done ITC, for instance, you would have invested around 18,000 rupees, you would be down 7.6%. So this is the scenario for any stock you look at. This is the reason why we have a list of stocks I'm considering and you're considering. We're not looking at a single company, we're looking at a basket of companies. So if you believe in this kind of hindsight, then everyone would have been buying only gold and everybody will be up 5% and everybody will be feeling great. It is not so. Looking back, we can always see the clear winners and we can see the clear losers. Looking forward, it's very hard to see where a stock or a company is heading or where it will finally go land. But if you are investing in companies which have good sound business, like I said in my previous video, and it has a good source of cash flow, right, and it is not debt ridden, then there's a likelihood this company will do well going forward in the future. That is why we consider companies like Natco. That is why we consider companies like ITC. This is why the reason why we consider companies like Tata Motors. I've done a number of videos, my brother's done a number of videos laying out our argument and our case for any of these companies. Why should we look at Tata Motors? Why we should keep something like an ITC in your radar? Because these businesses are sound. There's really almost negligible debt in these. They have great asset value. They have a great brand name. What you're seeing in the market, in the Indian economy, is temporal. It happened during the COVID. It happened during 2007, 2008 financial crisis. This, I do not know how long it will last. Maybe it will be a year, maybe it will be less than that. But we have to keep investing and moving along because we have a goal to reach 10 years from now. If you avoid investing in the market every time you see some kind of negative movement, you will be missing number of days on opportunities to invest. And it's very hard to predict where this so-called bottom is, this imaginary bottom all of you dream of. It is impossible to know when the highs are, the top, the ceilings of these markets are. So the best thing we can do is keep investing systematically in small increments, directly buying the companies we trust in brands we believe in, when the management and the business makes sense. And that is all we can do. Anyone who claims they can do beyond that, they must be having some sorcery or astrology which I have no clue about. I'm not a great believer in sorcery, magic and astrology. I'm a strong believer in science and numbers, and I also believe in human beings being emotionally driven. We are social beings. So these market fluctuations you see are sometimes more social than actually number and science based, which is good for us as value investors because it gives us those openings in the market, especially when we are new to the market. We have a great company when it comes into a range where we can afford to look at it. You should be brave enough to look at it at that point of time and not panic. The same companies we were discussing a year back and thinking how difficult it will be to touch these companies, how they are so-called diamond needles, how this is impossible. But when they come from their lofty highs into earthly realms, you should be ready to reach out and touch it. Of course, I'm strongly against people who are looking at putting lump sums into a market like this. The reasons why I don't want you to look at lump sums in this market is we are nowhere near even the mean. My brother had spoken about this on Instagram when I did a live with him, where we told you it's mathematics. It's as simple as that. Anyone who has done basic maths would know what a bell curve is and what is the middle. When we say the market's middle is a price to earning ratio of around 20, that means for it to be called 20, there is another side of the bell curve which has to be taken in account for. And if you say bear markets are usually shorter in duration compared to bull markets, that means that correction, when it happens, that will be a violent swing back and forth. We saw this during the COVID. We saw this during 2007, 2008. And if you don't believe me, go look at the data. So we are approaching the so-called where historically, right, where we can say data points have shown us the middle of this median is. So we have to move to the other side and then come back to this. Yes, there is an argument to be had that no, we are not in such a dire economic situation that it will start moving back. For that argument to be of any merit, there has to be things in the situation, in the economy or macroeconomically or company data, news somewhere to point us that such a situation is happening. Right now, there is no data point or anything pointing us towards that direction. And if and when such a thing comes, I'll be more than happy to agree with it and share it with you. As things stand right now, we are in some turbulent times. Some days the market might move violently down like it did on Friday. Some days it might be tepid like it was on Thursday where it was pretty flat. This happens even in the American market, it's happening in global markets, it's happening even in Japan. So what is going to create for this to reverse? Fundamentally, our economic situation in India has to change. And when is that going to change? When there is something happening from our government which reinvigorates our economy, whereas at least the lower sections of our economy start moving forward. It will happen because eventually people will get things right. Yes, it is frustrating when it doesn't happen fast enough. I understand that, but eventually it will happen. Not because of political reasons, because that's how government works. If you look at it historically, any government, if you see, makes mistakes and then they clean up the mistakes after some time. So that will happen. Our government will get the metrics right, our finances will get things correct, and slowly, the stars will align, and maybe Trump and Musk will also do things, will finally back off from the precipice where they're holding America right now, and things will start moving forward again. At that point of time, yes, our markets would have corrected enough where we look very appetizing and the FIIs might move away from China and come back. So there's a whole slew of ways this can happen. And when it does happen, I will be more than happy to. So as my advice would be, when Monday morning comes, when markets open, regardless of whatever is happening in the market, be it another day where it's violent like Friday, or be it a day like Thursday where it's pretty tepid and it's not moving anywhere, or even if you have a day when suddenly there is a great surge in our market from the DIIs or the FIIs, if you see value in the companies you've been looking at, please consider it at different coffee ranges, as we always say, or dollar cost averaging, as Shashwat was saying, and invest and be prudent that way. Like I've shared this data points, I'm sure Rupesh will put it up on the screen somewhere. No matter what share you picked, if you've been mixing and matching, you should be doing fine. If the market itself from January to now has moved considerably, you should be pretty happy with yourself if your pain isn't as drastic as the market is. And do have a sense of belief in yourself and in what you're doing. You've been doing this and following us for some time, and you know why we are talking about what we're talking about. If you're new to this whole thing, then for heaven's sake, do not start investing. Like I've said, if this is the first few videos of Anand you're seeing, or you've only been following me and Dana for a week or so, because someone put you on to us, please do not start investing immediately on Monday morning. Take your sweet time, learn what we're talking about, watch videos and understand and then start investing. Anyway, I wish you a wonderful Saturday evening. Please be safe out there in whatever fun and revelries you do there. I keep hearing so many stories about you younglings getting yourself caught up in kinds of trouble which I wouldn't wish upon anybody. So please be careful when you're having fun. Other than that, nothing else more to say. Have a wonderful evening. See you again tomorrow, Sunday evening. Something more interesting about personal finance. Thank you for watching the video today. See you again tomorrow. Bye.